Morning, guys. Today we're going to talk about 1.3, which is dealing with changes in owner's equity. We're going to do the notes, and then I'm going to do the work together for you so that way you can do it just like we do in class, and then you can do the on your own and the terms. Okay. So first off, make sure that you guys have turned in the Accounting in the Real World Terra Cycle. If you haven't got that completed, you need to get that turned in. You will also take your Chapter 1 vocabulary quiz today. I would encourage you to click on lesson 1.3 here and maybe read through this section in the online textbook just to reiterate everything that we go through today, especially since I'm not there in person teaching you this curriculum. So maybe just briefly read through that after we take the notes and do Mindtap together. So assets equals liabilities plus owner's equity. That is our accounting equation still. Nothing has changed. Last week, we dealt with transactions that changed assets or liabilities, and we also had a couple transactions that dealt with owner's equity. Today, owner's equity is going to be mainly our focus. So how do we increase our capital account, which is how we track what the owner's financial rights are to the business. So to increase our owner's capital account, we will either have two things: revenue, which is just an increase in owner's equity resulting in the operation of a business. For example, if we make a sale or if we see the word sold, that all has to do with revenue. Every time we see that, owner's equity is going to go up. The next is sale on account, which means that we made a sale and revenue has come into our business, but we haven't physically got the cash yet. So we talked about accounts payable last week. This week we're going to talk about accounts receivable. So sale on account is when we've still made a sale, we just have not received that cash yet, but we're still going to record it as revenue. The flip side of things, we also have accounts that decrease owner's capital. So it makes owner's equity go down, which is never great, but that's just how the world works, and operation of business makes us have expenses, which is the first way that owner's equity goes down, which is just paying for like bills and rent and sometimes different inventory and supplies that we might need in order to run our business correctly. So a decrease in owner's equity just resulting in the operation of business, so day-to-day things, is just an expense. Another way that owner's equity could go down is if the owner personally takes money out of the business. Most commonly it is cash. Sometimes we'll see assets that have been liquidated or sold off, so then the owner then reaps that cash and benefits. Okay, so a withdrawal is just when the owner takes money out of the business. All right, we have some example transactions again. So the very first one, we received cash from sales. We know that cash is an asset, so that would make our assets go up, so plus cash. We received cash from a sale. Sale means revenue. Revenue falls under owner's equity. Owner's equity goes up. We're in balance. Next one, we sold services on account. We see the word sold. We know that has to do with revenue. Revenue is owner's equity. Revenue increases. On account means that we have not received cash yet. So that is the accounts receivable, which is an asset to us. So we're going to increase our accounts receivable. Sorry. All right, next one, we paid cash for rent. If we're paying cash, cash is going to go down. So we're going to make cash go down, which is an asset. And we're paying for rent, which is just the operation of business, right? We have to pay for the place that we're holding our business at. So that would be an expense, which this is going to confuse you. An expense is going to increase over here, but it's like a negative number. So that's still going to decrease owner's equity. Which in fact will keep our accounting equation in balance. I know I told you what you do to one side, you do the other. Cash went down, owner's equity also went down, but that expense account went up as a total. And you'll see that a little bit later. And the next one is just the same. We paid cash. Cash is going down. We incurred an expense. And that is still decreasing owner's equity. Okay, received cash on account. So this person that we made a sale to earlier that we created an accounts receivable for is now paying us. So we received cash. We know that cash is going up. That's an asset. And on account, meaning that's accounts receivable, is now going down. So that account receivable zeroes out. All right, last one, we paid cash to the owner for personal use. If we're paying cash out, that's an asset and it's going to go down. To the owner for personal use, that is just simply a withdrawal. So that makes our owner's equity capital account decrease. This is the same as expense. So we're going to now incur a withdrawal amount in the owner's drawing, but it's like a negative number. So it will still decrease owner's equity in the end. Okay? Again, read through section 1.3 in Mindtap if that at all did not make sense. Now we are going to do the work together. You guys have 1-3 terms in Mindtap, but we're going to do the work together. All right, so we have 5 transactions, and we can see that we have our accounting equation. We can also see that we now have some accounts underneath those account categories. So assets, they have cash, accounts receivable, supplies, prepaid insurance broken down. We have one liability and accounts payable, and we have our owner's capital account. First one, received cash from sales. We know that cash is an asset, so it is going to increase. And sales increases owner's equity, so that capital account will go up. Next, we sold services on account to Harmon Company. For making a sale, sold services, that is revenue. So capital will go up. And now that accounts receivable has just increased because they owe us money. All right, paid cash for the cell phone bill. Our cash is going to go down. And since they don't have revenue and expenses broke out here, we're just going to put a minus sign because owner's equity is technically going down. Later, we will have the revenue and expense accounts broken out, and that's where we'll see the increases that I was talking about in the notes. But for now, we paid cash for an expense. Cash goes down. Owner's equity also goes down. All right, number 4, paid cash on account. Received cash on account from Harmon Company. So they are now coming in and paying off their bill. If we received cash, cash is an asset, and it will be going up. Accounts receivable for them is now going to decrease because they no longer owe us as much money. The owner withdrew equity in the form of cash. Well, if he took cash out of the business, we know that cash is going down as an asset. And in return, that's going to bring our owner's equity capital account down. Later on, we'll see the withdrawal account broken out, and then that's when we'll see that increase. But for now, if we're taking money out of the business, that's going to be a withdrawal from our owner's equity. All right, we can save that, and then you guys can continue on to the 1-3 on your own. So make sure you complete those next 5 transactions. They should be very, very similar to the 5 transactions we just did together. Do not forget to do the terms. And the only other thing that I need to have you guys do is take the Chapter 1 vocabulary quiz. There is a Quizlet in Canvas for you to use. And then tomorrow on your virtual day, you guys will complete one more small assignment where you read an article and then you answer a couple questions. So this will be for your virtual day. And if you did not finish the terms or the on your own for 1-3, then you need to complete that also. Make sure that you are all caught up on 1-1 and 1-2. Again, if you have any questions whatsoever, I will be on Zoom. So you can just pop into my Zoom or you can send me an email too. All right, thanks guys.